Hello everyone and welcome back to the channel, and I hope you guys are doing great. So in my today's video, I'm going to discuss with you about a new company called Aequs Limited. We're going to discuss their recent Q1 FY27 results, the con call summary, and as I'm discussing this company for the first time, we'll go into the business about in more details, and I'll explain you what do they actually do, right? So I know this video has come after a long time, after a break of almost a week. I was traveling with my family, so I've just come back. So I've got back into it. So let's get into it, right? So if you look at Aequs Limited, they recently came with their IPO at the end of 2026. So if you look at their business operation, right? So they have two parts of their business. So first is the aerospace business, and the second business which they have recently started is the consumer part of it. So over here, I'll get into details and explain what do they actually do, and where the growth is coming from, and what are the opportunities, what is the management promising, and whether does it look like they will be able to achieve it, or it's just how to say promise in the air. So if you look at their aerospace business, if you look at the screen, right? So they manufacture quite a lot of products for these aeroplanes, especially for A320, A220, B30, and for the long range also. So if you look at their various products, they have assemblies, interiors and cabs, structure, turnings and actuation system. And at the same time, they make high value products also, because if you look at the bottom of the screen, right? So they have these landing systems and engine systems, which is the most high value product which they manufacture into the aerospace segment. And if you look at their contribution of this segment to the overall revenue, it's around 81% of the revenue, so which is the biggest segment and their main segment, and the consumer segment is developing. And over here, right, so the main customers are Airbus, Boeing, Safran, Collin Aerospace, and Saab. So we saw what do they do in the aerospace business, and for Aequs, aerospace business is their main bread and butter, which is growing well and doing well. At the same time, they've entered into the consumer business recently, and let's see what do they do in the consumer business. If you look at the screen over here, right, we can clearly say it contributes to around 90% of the revenue as of Q1 of FY27. Over here, right, they have quite a few customers from Tramontina, Mattel, Wonder Chef, Spin Master, and everything. And if you look at their consumer portfolio, right, so they make various kinds of products. First is consumer electronics. So these are the components for portable computers and smart devices. And they have plastics, where they make vehicle toys, toy sets, interactive and creative learning toys, and consumer durable, where they make around non-stick cookware, right? So if you look over here, right, so as you would have seen on the screen, right, so they have two business segments. First is the aerospace, and the second is the consumer part, in which also divided into various parts. So let's dive down into the recent results, how the results were, and then get into the con call and see what the management is saying. So if you look at the revenue perspective, right, the revenue grew by almost 55% from 255 crores last year to almost 395 crores this year. In terms of EBITDA margin, if we see, there was a decline from 16% to 5%, and the PAT margin also declined from almost, if you look from Q1 of FY26, from 1% to minus 13%. One of the main reason is because of their entry into their of their new segment, which is consumer business. So over here, what has happened, right? Last year when they were doing the investments, so all the assets were, all the expenses were capitalized into the balance sheet, and only starting from Q1 of FY27, now it is being, as the production has started, it has been expensed to the P&L, and that's why we could see this drag. But the if you just look at the number, right, it might look okay, the things are going wrong, things are not improving. But if you look at what the management is saying, things are completely different. So this is the number, if you see, and if you look at their revenue division as per the segment, right? And if you look at the screen over here, right? So in Q1 of FY27, consumer contributed around 19% of the revenue, aerospace around 81. And if you look from compared to the last year, right? The consumer division almost doubled from 10 to 19%. And if you look at their export profile, last year the export was around 89%. This year also remain stable at around 88%, because majority of these components which they make for aerospace is mainly exported. And the consumer, sorry, and the domestic revenue remain almost stable. And if you look at from the revenue from the segment perspective, right? And if you look at the screen over here, the revenue for aerospace grew by almost 40% YOY. And if you look from the quarter-on-quarter perspective, also it grew by almost 6%. And if you look at the EBITDA movement, right? The EBITDA improved from 53 crores to around 73 crores. So we can clearly see over here, right, the aerospace segment, right, which is the main bread and butter, that is doing well, not in just terms of the revenue, but in terms of profitability also, because they are able to utilize it in a much, much better way. In terms of, if you look at the consumer side, if you look from the revenue perspective, it grew by more than 100%. It's almost like you can say it's almost more than double, because last year they did a revenue of around 25.3 crores, and this year they did a revenue of around 73.4 crores. And but if you look at the EBITDA moment, that's where the challenge is, right? Because last year they had a negative EBITDA of around minus 7.4 crores. This year it is around 36.1 crores. So over here, right? So what is happening? Because as they have started this new segment and they have invested, and the capacity utilization currently is at a quite low level at the around 22 to 23%. That's what is impacting. But as the management has said that as and when the capacity utilization improve, the profitability will also improve. And if you look in terms of the capacity utilization for aerospace, it is currently up to almost 70%. And if you look at the consumer capacity, it's around close to 22%. And if you look at the order book that the company has, right, especially for the aerospace, it's around close to 1,000 million dollars as of Q1 of FY27, which is a growth of almost 13% QY. And the other good thing is, right, in the aerospace part, they have added around 86 new parts compared to the last year, which is a growth of almost 7% YOY. So these were the main things as per the segment wise, the revenue, the results. So let's see what are the main highlights that the management is, spoke about, what are the things that we need to concentrate it, what is their target for FY27, and what are the expansions that you're doing. So one of the main key updates, right? So as I already spoke about the order book grew by almost 13% and is now exceeded close to USD 1 billion. And the thing what happened recently, they signed agreement with the two new aerostructures, which are tier 1 customers, where because of which they were expanding their global bits. And at the same time, one of the most important thing that has happened is, right, they have signed their first fully contract with the Airbus A320, where they will manufacture these wheels for Airbus A320 with Safran Landing Systems, right? So this is the contract that they have got, and every wheel that they'll manufacture, like, will be complete end-to-end in their Indian manufacturing facility. And the good thing about is, right, this agreement is not a short-term agreement for 1 year or 2 year or 3 years. It's an agreement of close to more than almost 15 years. So which is actually quite a good sign. So that, because see, we need to understand, right, the in the aerospace industry, India is still growing and improving thing. And to for an Indian company to get this how to say, the contract for high value product is quite valuable. And if you look in terms of the expansion, right, if you look from the aerospace division, right, so they are planning to start a new plant in their in Hosur. So over here, where they will mostly focus on engine and landing gear components. And the management said that they expect the revenue to start coming in from the year of FY29. And in terms of capex, if you look at it, the management said that they'll do a capex of close to around 1,900 crores over the period of next 10 years. And if you look at for the consumer, so there is no further, how to say, money being put in terms of capacity expansion. But what they are looking into is, right, to improve the capacity utilization. Currently, the capacity utilization stands at around 22%, and they want to increase it to around 40 to 50% by the year end. And in terms of capex, if you look at it, right, for this year, for quarter 1 of FY27, they did a capex of around 83 crores. And for the whole year, the management said that the capex would be around 660 crores divided between consumer as well as aerospace. And the things might change depending upon the order book, depending upon how the capacity is being utilized. So these were the main things from the concon. And if you look at this on the screen, right? So the management has something called as Vision 2031, right? Over here, right, what they are trying to do, right, they have clearly mentioned it. So in terms of revenue, if you look, they want to compare it from FY26, they want to grow their revenue by all minimum 4 times to 6 times. And in terms of EBITDA, if you look at it, they want to keep their EBITDA between around 18 to 22%, and return on capital employed at around 20%. And if you look at their aerospace division, right, over here they are saying that they want to see a revenue growth of almost 4 to 5 times at around 20% ROE, and with the EBITDA margin of around 18 to 20%. And in terms of consumer, which they have recently started, right, they are targeting the revenue growth of almost close to 10 to 18 times, and they are saying that at the back office they'll get a immense operating leverage. And over here also they want to maintain the ROC at around 18 to 20 percent, and EBITDA of around 18 to 20%. And the overall capex that they will do for the next 5 years is goes close to be around 350 to 450 million dollars. And if you look at the bottom of the screen, right, so they have certain targets for certain things. So by Q4 of FY27, they want their consumer division to be have a break even at EBITDA level. And then in H1 of FY28, right, at the overall level, which includes both consumer as well as aerospace division, they will have PAT a break even. And in from FY20 in FY29, the Hosur aerospace revenue will start kicking off, and by FY30, the consumer division, right, will have a PAT break even. So if you look at the screen, so these are the targets that they have given. So as a investor, as an analyst, if you're analyzing the company, this slide becomes very, very important, right? Because this is how we can know what the company is trying to do, or what the company is trying to achieve, right? Whether they are on track or not, right? Because they've clearly said that they want to grow their revenue by around 4 to 6%, achieve an ROE of around 20%, have an EBITDA of around 18 to 22%. At the same time, they have given, the how to say, the timeline of consolidated PAT break even, consumer PAT break even, the EBITDA. So everything has been given by the management. So anyone who's invested or who's planning to invest or who's tracking this company, in every quarters, the most important thing is whether they're able to achieve these targets or not. And if they are able to achieve, which is good enough, market will by default reward it. In case they're not able to achieve, one needs to look at what went wrong and whether this will derail the whole plan. So overall, if I look at it, Aequs, right, they are mostly into I would say like a turnaround from trying to go from a loss-making company into a profit-making company. And the market, if you look at the generally, I don't look at the charts, but if you look at the after the IPO happened, the stock went down, and then it's almost doubled in the past few months. One of the main reasons is why, because the market does not care about what happened in the past, or what is currently the loss right now. What the market is looking is where the company is going. So they have seen this vision, they have seen what the company is trying to do, and the market is trying to price in well in advance. So the challenge is, if they're able to do it, the market will reward even further. But if they are able to, do not achieve it and they lag down, it's going to get beaten down. And so this is what it is for Aequs. So in terms of aerospace, they are growing well. The consumer business is also, growing quite faster. If anyone who's looking to, invest or looking for opportunities, please go through it, read through it, and understand more, and especially keep a track of all the promises that the management has made. Because one thing that market does not like is like what the management promises is not able to deliver. If they under deliver, the market is going to punish badly. And if you guys like this analysis and the video, please do hit like and subscribe to my channel. Thank you, and God bless you.